What does it mean when India's most conservative tech giant, Tata Consultancy Services, starts showing the door to thousands? In a move that's rattling India's $280 billion IT industry, TCS is letting go of nearly 12,000 employees, a first in its storied history. Why is this happening? Well, the company attributes it to a widening skills gap, but the headlines talk about macroeconomic turmoil leading to a slowdown in demand, leading to weak financials. In fact, TCS saw its third straight quarter of revenue dip in April to June. And then, of course, there is the proverbial AI onslaught, which is making thousands of jobs redundant. But beyond the headlines, it's a story of outdated skill sets, a shifting client playbook, and a bellwether under siege. So, what is happening at TCS and what are employees saying? Where does this go from here? Why are mid and senior level executives being axed first, and what does it reveal about future job security? Will other IT firms follow suit? In other words, are we witnessing the beginning of mass tech layoffs in India? Listen on, it's Tuesday, the 29th of July. I'm your host Anirban Chowdhury, and this is the Morning Brief. First up, my colleague and ET's main IT tracker, Beena Parmar.
Hi, Anirban.
Beena, is this unprecedented? And of course, what's driving the current wave of layoffs?
I think this is absolutely unprecedented. This is the first time probably a large Indian tech company has called out a number that they're planning to lay off. TCS, like every other company, is facing the AI disruption. Now, TCS really hasn't been able to identify the future skills in terms of their demand or the forecasted demand for FY26. And even for that matter, FY27, they're still figuring out how they can use AI to upskill, to reskill, to cross-skill initiatives, which may currently seem very hard for each company to understand. Clients on the other side are demanding a lot of efficiencies. They want the same work to be done at cheaper costs. For the last 3 years, we've also seen IT companies have seen a business slowdown. Because of macro uncertainties, there has been a cautious demand from companies. They are kind of keeping their discretionary business, discretionary technology spending on hold for some time till they figure out how to really get going with the businesses. But while they figure out, all companies want to protect their margins and save costs. So this is all a path of saving costs. And TCS, in fact, has categorically said this in their statement that they are trying to conserve cash as they will want to invest in future critical investments. They want to be a future ready organization. And I think most companies are going to look at saving wherever they can. And employee costs are the biggest cost, especially for an IT industry, which is more people led. This is, I think, one of the biggest bloodbath that we will see because of the AI disruption and business slowdown.
Got it. Beena, you spoke on the costs, but revenue has also been hampered, right? In fact, TCS recorded its third straight fall in revenue in the June quarter, and its performance has been the weakest amongst peers. So clearly, margins are also precarious.
Yes, Anirban, I think most companies have been sort of, struggling to increase their revenues. And while they do that, they want to ensure that their margins are protected. Now, why are margins important? That's because whenever investors look at a company, they want margin sustenance. Even at a time when revenue is little on the downside, they want to ensure that margins are protected because this ensures that companies are ready to invest in future, especially at a time when the macro environment is so bad. But if you see over the last 1 or 2 quarters, most of the companies have been a little on the conservative side as far as their margins outlook is concerned. And which is why they've been trying to ensure that they pull all the levers, including utilization of employees. TCS itself has rethought on their bench policy, which says that they do not or should not have employees over 35 days lying idle without any project. Employees are put under pressure to bring on projects on their own, and they should be billable. Basically, if the employee is on a project, only then the client will pay revenues, and this is how they are going to make money.
Right. Okay. Beena, how did you react to this? TCS has been known to conserve its employees quite a bit. And more importantly, I just want to tap into your reportage a little bit and ask you, what you hear inside the company. What are the employees really saying? You wrote that this is mostly the mid management and the senior management that's getting targeted. Why is this happening? Usually we hear about freshers, but is this different? And what do you hear from inside the company?
So mostly it's the freshers who are being targeted because they are large in numbers in every company. This is the time when we are seeing a lot of senior and mid-level employees being affected, because a lot of AI-led efficiencies are not being able to be met by the mid and senior level. Also, there's a cultural shift that we are seeing. IT companies are no more the attractive job locations for a lot of employees. And also, tech jobs are largely kind of correlated to the larger tech companies. Startups have done some headway, but I guess a large aspirational class in India is still reliant on TCS and Infosys, or for that matter, Wipro. And that is the reason, if you hear a layoff at a company like TCS, fears are going to be real. Most of the employees are saying that, while we've not got hikes, we still don't know what is our future. I would want to leave, but there are no jobs which are similar to my role. There have been rumors of various regions, various domains, various units being asked to leave. So, as companies or as the senior management delivers projects to employees, that is when the confidence will be intact. But those without any project, those on the bench, are definitely fearful of what happens to them next.
Got it. And also, Beena, this is a trickle down from a global trend, obviously. We recently heard Microsoft announcing layoffs of about 10,000 of its employees. We had the Cognizant CEO, for instance, Ravi Kumar S, on the podcast recently, and he said about 50% of their code will be written by AI by the end of this year, which obviously means that a lot of positions get redundant. So, do you see this trend spreading to other companies as well?
Indeed, I think most of them have been fearful of the jobs or the roles being redundant as AI does more of their work. And definitely, every industry executive or leader has been pointing out that AI is definitely looking at replacement of a lot of roles. So, over the last quarter, we've already seen 4 companies reducing their headcount by over 70% as compared to the previous quarter. Barring TCS, it's Infosys, Wipro, Tech Mahindra, and LTI Mindtree. So clearly, these are some hitbacks that most of the companies are facing. AI-led job displacement is real. It's just that they're figuring out how they will, match this and meet this in terms of their revenue demand.
Beena, thank you so much for joining us on the morning brief.
Thank you, Anirban.
Next, Beena spoke to Gaurav Vasu, founder of UnearthInsight, a data and research platform.
Hi, Gaurav. Welcome to the Morning Brief ET podcast. Thanks for taking time out. I think the big news coming in over the weekend was the TCS announcing its layoffs of 2% of its workforce. I think TCS just announced its Q1 results. And while their performance was subpar, did you really anticipate this move?
No, it is definitely an unprecedented and kind of a surprise move. But yeah, as an analyst, I think we saw this coming. It is just that the timing of of the same was surprising. If you have been observing the last 6 to 8 quarters, we've actually recorded, low single digit teen growths post COVID digital transformation era, where high single digits and even closer to double digit growth was a given, right? So I think not just for TCS, but I think across the board, 3 to 5% growth for FY26 is something that wasn't expected. So everybody was actually looking at FY26 to be a recovery year, which doesn't look like, because UnearthInsight prediction is that for FY26 we could end the year with a 3 to 5% growth. So back in December, we were also the first one who predicted that tech services firms will now start taking a lot of operational optimization calls, because I think when the growth slows down, a lot of your tech services firms actually then look towards margin sustenance and margin improvement. And we also said that concepts like bench and headcount, time on bench, all of that would also get strained, because I think they would be looking at, matching the right supply of talent with the demand in the market, which wasn't really happening, because on one side you had the demand slowdown, and on second side you also had, global enterprise clients pivoting more towards AI first and agentic first application integrations in their entire tech stack. So I think the timing and the scale at which they've done it, the pace at which they've done it, I think that could have some ripple effects on the industry as well.
How do you see this panning out across other peer companies?
We see this having two kinds of effects, right? One, a lot of, tech services firms could start looking at this, to identify areas of optimization. Could be mid to senior roles, project management roles, non-technical, non-billable roles within projects. And that could lead to identification of about 0.5% to 1% of the headcount in both delivery and support functions, given that the slowdown looks like it's going to persist. So you could have a set of companies who could take a bold approach and do what TCS did, but it could also have in the short run a slight effect on the involuntary attrition numbers. So involuntary attrition could actually go up slightly, because I think the industry leading players doing this also allows a lot of the others to, take a leaf out of it and see if they can at least be margin focus on margins and protect the margins. Third, I think the industry average hikes have drastically dropped from, highs of 8-10% post COVID 2021 2022 era, to actually, 5 to 6%. And this year our assumption is, some of them have already delayed by a quarter and two. We also feel that, this could further shrink the average wage hike in the industry to 4 to 6%, barely, at par with the inflation.
Right. And Gaurav, you and I have been talking about, the attrition, the layoffs, but also there have been a lot of silent layoffs over the past 1 or 2 years, which I think the industry is not talking about, but there have been murmurs around it. So how do you see really, this impact coming from? Where is this coming from? Is it because of slowdown? Is it because of AI? What is it according to you?
Let me put it this way. I think when you look at, there's a lot of questions around, has AI actually led to the slowdown, or has AI actually led to, slowdown in terms of the net headcount addition? If you look at
Right.
last 2 years, gross hiring is still decently up, which means attrition backfill plus hiring, right? But the net hiring is almost stagnant, or net hiring is actually seen almost maybe not more than 1 to 5% growth, depending on the which player which you're looking at, right? Tier two
Right.
have obviously been the leading headcount additions that tier two firms have done, right? On the client side, if you look at what's happening, the nature of deals and the deal tenures and the type of
Mm.
deals have drastically changed, right? Industry has now moved to a phase where, from your, global banks to financial services to retailers to oil and gas, telcos actually don't have a lot of clarity on how the new world of AI is going to look like. Should their tech stack drastically change? How much should they invest in running the current tech stack ecosystem of SAP, Oracle, Workday, ServiceNow, which they have, to actually new agentic world of operating or AI world of operating? Not a lot on the client side is also clear in terms of saying, should they actually go 90-10, right? Which means 90% of my technology investment will be to sustain the current technology ecosystem that I have. And I call in Accenture, TCS, Infosys, Wipro, HCL to run and grow and transform my current tech stack. And hence you see that clients also have taken a cautious approach. While the deals pipeline have been large, but conversion of that deal into revenue has been much smaller, much lower, right?
Right.
Second, I think this whole AI transformation itself, a lot of clients are also partnering with consulting firms, industry experts, AI experts to understand what part of the entire tech stack will this go and impact, and what are those use cases that they should look at. So banking has been a decent adopter. Retail seems to be having been an early adopter. Supply chain, merchandising, a few on the consumer facing roles as well, right? So
Got it.
given these two uncertainties, the client spend on what you call as digitize and disrupt, right, is changing drastically. And that is a part of the market share which the Indian IT services or even global IT services haven't been able to capture. That's a lot of, your new age startups, new age AI first enterprises who are actually capturing that part of the tech spend side. Now, what is that doing? That is actually making the tech services firm rethink on what kind of pyramid do they need. It's actually the middle of the pyramid and top of the pyramid where they see a lot of intra roles, a lot of application coding roles, which they feel that, with the cursors of the world, with a lot of ServiceNow, Salesforce, agentic coming in, there is a lot of opportunity for them to optimize. I think those are the
Right.
areas where, they have actually gone ahead and done a lot of cleanup and silent layoffs. And I think part of technology consulting as well. Indian tech services firms are not very big on it, but I think there's a lot of silent high layoffs in the tech consulting, techno functional and tech consulting world as well, right? And the other piece is a lot of cost takeout deals typically tend to be short term deals, right? One
Hmm.
quarter to 3 quarters to 4 quarters. So that's not a sustained revenue for a longer tenure, right? So I think given all of these factors, we have seen silent layoffs in traditional freshers whose roles can be replaced, whose roles can be optimized, and at the middle and top of the pyramid level where people are playing techno-functional roles or subject matter expert roles or project management skills and coding and infrastructure skills, which they've started experimenting at early stages with technology, right? So that's how I would actually summarize this.
And I think just to extend that line of thought a bit, is inflated wage bill also kind of hitting companies in a big way?
No, to give you a very honest answer, I wouldn't say that the wage bills are inflated, because if you
Hmm.
look at historically, our tech services industries wage bill as a percentage of revenue has not crossed beyond 55-58%. Some of the
Hmm.
best managed companies which are employee friendly will look at a 60%, but that's more, MNC IT services. Uh, and in pockets, yes, they have done opportunistic investments in building AI practices, Gen AI practices. And those are the areas where, you might feel the wage bills are inflated, but I think that's capital investment or, investment for future. I also feel, the reason why industry is sort of getting a lot of negative flack is because a lot of players are not able to keep up pace with the inflation. So a lot of wage hikes are also not aligned to the inflation, right? So that's my point of view. I wouldn't say it's
Right.
inflated. Anything lower than this would actually impact the quality of the delivery that our IPPs and Indian tech services ecosystem will deliver for the global clients.
Right. Interesting. Just last thought. What do you think employees, the market, and even the media should brace for going ahead?
I think from an employee's perspective, I would say that consistently upskilling, reskilling, and if you actually picked up what I said, the embedded
Right.
AI ecosystem, right? Because clients are thinking of rejigging their entire, not if not entire tech stack, but at least parts of their tech stacks with AI coming in. So I think from an employee perspective, it will be how can they actually look at vertical AI specific components or AI products that exist there in the market where they add their skills on. Second, I think domain is going to be very, very critical. So if you can strengthen your skills in either a banking, financial services, within that, let's say wealth management, or within that insurance, and become an expert in that particular domain, I think that
Got
also
it.
adds a significant amount of value. And that's how I would, share my point of view from an employee perspective.
Right.
Reskilling, upskilling themselves, going deep on a domain, going deep on a technology or a sub technology, to make sure that they're relevant for future. Your second question was on media. I think you should brace for a lot of short-term uncertainties and short-term surprises. So Beena, I wouldn't be surprised if you and I will be chatting over the weekends, over the next 3-6 months, because a lot of uncertainties, right? That's how the times are going to be volatile. You could see not so great news or some interesting good news is over the weekends as well. So a lot of it, I would say, is short term, uncertain, and you could see unprecedented decisions as well. Not just for tech services. I wouldn't be surprised if you see this in enterprise SaaS and enterprise technology as well.
Got it. I think we started on a grim note, but still there's a lot of scope for reskilling and upskilling. I think that is what is my takeaway. But thank you so much, Gaurav, for your insights. Thanks for your time.
Thank you. Thank you so much, Veena.
So, the TCS layoffs are a sign of times and a referendum on how future-proof or future-ruthless India's tech sector is really going to be. Leaderships that long played it safe are now making hard pivots under pressure from margins, machines, and market shifts. As IT watchers and professionals ponder over who would be next to announce layoffs, the bigger question is whether the industry has a plan beyond the pink slips. That's it for today. You were listening to this episode on The Morning Brief. It was produced by Vinay Joshi, sound designed by Amrit Reggie. A new episode of The Morning Brief drops every Tuesday, Thursday, and Friday, wherever you get your podcasts. Also check out our new show, Corner Office Conversation, where the brightest minds from ET speak to the most interesting business leaders from India and the world every alternate Monday on your favorite listening platform. Thank you and have a good remainder of the week.